Hello, welcome to Business Morning live on Channels Television. I'm Ladi Williams. Thank you for joining us. Let's take a look at what's in the news there with the oil market. We see President Joe Biden said that the administration will tap the Strategic Petroleum Reserve as part of a global effort by energy-consuming nations to calm 2021's rapid rise in fuel prices. The U.S. will release 50 million barrels from the SPR of the total 32 million barrels will be exchanged over the next several months, while 18 million barrels will be an acceleration of a previously authorized sale. U.S. oil dipped 1.9% to a session low of $75.30 a barrel following the announcement, before recovering those losses and moving into positive territory. The contracts last traded 2.5% higher at $78.67 per barrel. International benchmark Brent crude stood at $82.31 a barrel for a gain of 3.2%. And back here, the Senate President, Ahmed Lawan, says the 2022 appropriation bill will be passed on December the 14th in order to maintain the January to December budget cycle. Lawan, who made this known during plenary, said today, Wednesday, November the 24th, will be the last day for the budget defense by subcommittees of the Appropriation Committee before the Committee on Appropriation. While noting a delay on the part of other committees, the Senate President asked members of Appropriation Committee to work expeditiously in meeting up with the scheduled date. And the Central Bank's Monetary Policy Committee has kept its benchmark interest rates and other key rates unchanged for the sixth consecutive time this year. At the end of its two-day meeting yesterday in Abuja, the CBN Governor, Godwin Emefiele, mentioned that the committee members unanimously voted to retain the monetary policy rate at 11.5%, whilst keeping all other monetary parameters constant. CBN Governor also expressed concerns over the spate of insecurity in the country, which has seen the prices of food constantly rising. He is, however, optimistic that with the harvest season approaching and efforts by the government towards combating insecurity, prices of food commodities are likely to experience a reduction. Do take a listen.
MPC was gratified that its policy actions in the past had started to yield positive results, given the remarkable improvement in gross domestic product, which stood at 4.03% during the third quarter of 2021, and the sixth consecutive month moderation in inflation to 15.99% in October 2021. Given the level of its conviction about the efficacy of its actions on macroeconomic variables, MPC felt that whereas tightening would further help to rein in inflation aggressively, it nevertheless feels that tightening will increase the cost of funds and constrain output growth. On the other hand, whereas loosening will lower policy rates, ease liquidity pressures, and stimulate additional credit creation, which will boost output growth, MPC also thinks that loosening will further widen the negative real interest rate gap and compound the price distortions in the money market, which could fuel inflationary pressures. As for whether to hold its existing stance, MPC believes that the existing monetary policy stance has supported the growth recovery and should be allowed to continue for a little longer for consolidation to achieve the MPC's mandate of price stability that is conducive to growth. The committee also feels that a hold stance will enable it carefully appraise implications of unfolding global development around policy tapering and normalization by the advanced economies. Based on the foregoing, committee decided on a whole to hold all policy parameters constant to support the enabling environment for sustained recovery of the Nigerian economy. Committee therefore decided by unanimous vote to retain the monetary policy rate at 11.5%. In summary, MPC voted to 1. Retain the MPR by 11.5%, retain the asymmetric corridor of plus 100 and minus 700 basis points around the MPR. 3, retain the CRR at 27.5% and retain liquidity ratio at 30%.
Well, that's the governor of Central Bank there, Godwin Mefele, at the MPC meeting there, leaving all rates unchanged for the outcome. To bring us up to speed now and dive into this result, we have Paul Alaje now, a senior economist at SPM. Great to have you on the program. Good morning.
Good morning, and thank you so much for having me.
Yeah, so you heard the Central Bank governor there. It's a hold again. Analysts expected this, but for you, how did you see this outcome? You know, it looks like it's become some kind of ritual now.
Well, for me, I think the best decision was taken yesterday by the Monetary Policy Committee. The decision, of course, was mentioned to us by the Central Bank governor. It's so important for the Monetary Policy Committee to sit on the fence because, like the governor mentioned, the decision to keep CRR monetary policy rates as well as liquidity ratio at the rate they are currently at is so very significant because when you look at the growth that we have to about 4.03%, it looks high, even though it's a bit slower than 5% we had in the previous quarter of Q2 2021, now Q3 2021 at 4.03%. This is high, but when you compare it with the base year, when you put in picture the base year in consideration, where Nigeria was declared to be in a recession in the third quarter of 2020, you know that it will not be sufficient reason for Monetary Policy Committee to change rate. For me, I think we need to wait till the first quarter of 2022 before such rate could be changed. And of course, this is the last MPC for the year. We need to wait till next year and see when Nigeria got out of recession in the fourth quarter and became a bit balanced in the second quarter. At that time, whatever the rate is, if we are still growing after we have seen the first quarter report of 2022, then we can know whether it will be a good time for us to vary rate or to keep rate constant. Another thing you might want to look at, which is one of the core mandates of Monetary Policy Committee, is what is happening to pricing. When you look at inflation at 15.99% is still quite high, even though it has started to increase at a reduced rate at about 16% or 15.99%. Monetary authorities' mandate or target is between 6 to 9%, which is a single-digit inflationary rate. What we had is still very high, so it's important for us to continue to wait or to see a little longer what the impact of the current monetary policy rate, among other rates, will give us in coming period.
Is that why we can't feel the reducing prices in the market right now?
Yes, I understand that we are not seeing the reducing pricing. Official inflationary rate, it's 15.99. And when we look at what government compared, National Bureau of Statistics has reported the 2020 price in October, when it's related to this year. That is what was reported. And when you look at a basket of commodity, we are not saying inflation has reduced, and that is why it's important for people to understand when we say inflation is, as you know, the report has been reduced from 16% to 15%, as the case may be. But the real sense is actually increased by 15.99%. But this rate of increase is lower than what it was before. But what other things people need to quickly check, it is what is month on month, what is quarter on quarter. When you compare those quarterly and monthly changes, then you can see that inflation is actually increasing. But when we are comparing it to last year, which is why we have 15.99%, again, you might also be seeing that some prices are increasing. I am of the opinion that the National Bureau of Statistics needs to reconsider some of the commodities they have in the basket of the CPI, that's Consumer Price Index, so that it can reflect the consumption of people today. It is very tough for us to convince people that inflation is reducing. Meanwhile, when you go to the market, the prices seems to be increasing from what etiquette was at this time last year till now, for what quite a number of other things. You know, you can talk about sardine. You can talk about even common goods, bag of rice. What was it before? What is it now? Quite a number of other commodities that have continued to increase. I think conversation should be around why is it that upon all combination of factors, you know, review of rate, interest rate is quite low now. You remember that it was around 14%. Now it's about 11.5%. Why are we still having high inflation? What are the factors responsible, and what do we think authority can do to reduce this growing inflation in Nigeria, even though it has continued to increase at a reducing rate now, which is better, but we still we have a longer way to go so that we can have it checked within the single digit that is the target of central bank.
All right, what's your view on the quantity of money circulating in the economy right now?
Okay, so the quantity of money circulating, even though we say that we have too much, we have excess supply of money, and that's one of the reasons that can fuel inflation. For me, I really don't think so. I think quite a number of other things are fueling inflation. One of the things, when you read the report of National Bureau of Statistics, is food inflation. And what is the real cause of food inflation? 3 factors. Number one, you want to talk about insecurity, because quite a number of farmers who are supposed to be on farm are finding it challenging. Before now, Southeast region was not part of security concern. Today, it's huge security concern. Wait till Monday and ask people to go to farm or go to the market, and they tell you that they want to honor sit-at-home order. Southeast is not alone. You check Northeast, some states are still being ravaged by Boko Haram, banditry, and so on and so forth. Southwest, that we knew for, Northwest, that we knew for a region of peace, is also battling its own share of insecurity. South-South, Southeast, Southwest, and North Central, you know, as close as it is to Abuja, Niger, Benue, Nasarawa, quite a number of states are having their concern in the remote areas where you have the farm. So concerns are there regarding security, and most of the people that stay in the rural community are farmers, so they are directly affected. That on one hand. On the other hand, we also have logistics. You know, just yesterday we saw what was making around on social media regarding traveling between Abuja and Kaduna Expressway and security concern. Imagine those that want to move their goods from the remote part of Kaduna to Abuja. What happened to such commodity? Kogi State, National Bureau of Statistics report, continue to top the chart for high inflation. So what exactly is going on in Kogi State? Is it logistics? What are the concerns that are around these increased prices? For me, logistics play a major role. And recently, government is saying it wants to remove subsidy and perhaps replace this subsidy with 5,000 naira between 30 to 40 million Nigerians. And that when they do this, then we're going to remove subsidy. Allegedly, prices of petrol may go to as high as 200 or 300, or as the case may be. I wonder how that will happen, because authorities upon authorities have tried to remove subsidy from Nigeria. People have said, oh, we need to have strong body language. We need to just do it. My concern is that a government that will do that must first, as a matter of urgency, put palliative, which will be evident in infrastructure, number one, which will also be evident in reducing the burden. And this burden is not 5,000. Subsidy is not evidence of 5,000 throughout a month. Civil servant goes to work, they want to go back home, and prices of transport will, of course, significantly increase. So what are the other alternatives we are giving people? Maybe buses, and so on and so forth, so that the impact of reduction, of removal, will be so minimal. That on another side. Again, why do we continue to have that? Anytime there is exchange rate, and Naira reduces in terms of value to the dollar, it has impact on everybody. It is because the more we import, you know, when we have high import and we are not exporting enough, you can see the trade report shared by Central Bank recently. It revealed, and also the report shared by National Bureau of Statistics, by the way, it revealed that we are importing more than what we are exporting. And when we are importing, we are using the dollar. That means we are laying more demand on our foreign reserve, and it continues to make the value of our local currency, because central bank is not having sufficient to intervene in the market. Recall that even though we have significant reduction, I think earlier this week or late last week in the parallel market, the price have also started to go back high, which is huge concern to all of us. So for me, we need to do something about exchange rates, and people have said, oh, maybe we should just converge and devalue naira and become 500 naira to $1 officially, and maybe we should make it what parallel market is. And I've made my position known. Anybody that says we should devalue like that, I don't think such person mean well for Nigeria. We have been devaluing since 1983 till date. What has actually changed upon the policy shared with us by IMF, structural adjustment program policy, quite a number of other policies that Nigeria has adopted? Has it made our economy to improve? Has it made us to develop? What exactly have we changed? And we can say reducing exchange rate has helped us. I am not saying we must defend naira by force. I am saying we need to empower naira through our industry. We need to empower naira through high production. And these are responsibilities that both the private sector and government, public sector must put in place so that we can export. Our export is low, and at best what we're exporting is crude oil. And to just talk a bit about the proposal, maybe we should remove subsidy, which I think I support, but I don't support it if the impact will be much, which obviously will be, because we are not seeing under infrastructure in place for government to reduce the impact on the people. And exactly why do we need to devalue? Exactly why do we need to remove subsidy, and why will the impact be much? For me, I am of the opinion that if we don't have alternative to production locally, that is refining oil locally, saying that we should remove subsidy is to take the whole burden and put on the people, the rich, the poor, and the deprived. So if we say we want to remove subsidy, well, of course, which impact will be on the people? Before we do that, we need to make sure that oil that we produce locally are refined locally. So that when you say forces of demand and supply should adjudicate price, there is truly a supply side. As we speak today, the supply is coming from outside Nigeria. And whatever happens to exchange rate, eventually we go to the people. So what happens if global oil prices go to $100 per barrel? What if it goes to $150 per barrel? How will our people be able to afford it? The same argument with electricity. You have seen what happened to gas. 3 months ago, what was the price of 12.5 kg? Or 6 months ago, what was the price? What is the price today? So an economy where the real income continues to emaciate because of double inflation figure on one hand, and we want to now make the people to compete globally. Meanwhile, the economy we live in, the fundamentals and the foundation remains very weak. When you say we should also remove, we should allow forces of demand and supply to adjudicate for power, the question is, what are the alternatives? In Abuja, if I don't want to use AEDC, which other option do I have? That's monopolistic. In Lagos, if I live in Ikeja, I don't want to use eco-electricity. I don't want to use Ikeja Electric. Which other option do I have? So there are no options for people in the real sense of it. So when we say that we have just one option, and we also have to accept the price, then I'm wondering if truly we are talking about economics.
Right, quite incredible. There are no options, basically. But another issue now, we see the U.S. Federal Reserve has announced its decision to begin reducing the monthly pace of its net asset purchases by $15 billion later this month, and another $30 billion beginning in December. What would be the impact of this decision on foreign inflows into Nigeria?
The impact of foreign inflow into Nigeria as the result, as an implication of U.S. decision, it might act adversely. It might be inverse in terms of implication to us. So for me, I think Nigeria, we need to get to a point where we can attract foreign investor irrespective of what happened or whatever will happen in another environment. And I hope that we will get to that point very soon.
All right. And what are the, likely actions, from the fiscal authority that, should actually help the efforts of the monetary policy? Just briefly.
For me, fiscal authority, that's talking about government income and expenditure. We need to spend more on capital to attract investment. What we are not having sufficiently enough today is inflow into Nigeria. And at best, those that want to invest in Nigeria, that we are not even having sufficient of, they are portfolio investors. We need to have people who want to reinvest in the real economy, and policies that will come from fiscal authority and, more importantly, trade authority must be to attract foreign investors into Nigeria. And this will come when our policies are transformational in nature. It will come when our policies are supporting investment environment in nature. If we don't have that, I'm sorry, monetary policy makers will continue. We have seen interventions. Central bank, more or less, is now an interventionist bank, intervening in most of the critical sector of the economy, without which maybe we will not even have this positive growth we are having right now. So central bank will continue to intervene. Monetary Policy Committee will try to make a number of policy. But when the other legs, namely fiscal and trade authority, are not doing their part, I am sorry, the impact may not come. When we talk about convergence of policy, we are not saying that the Minister of Finance and Central Bank Governor are not meeting. That's not what we are referring to. We are saying the results of their policy must converge. It must be such that they want to achieve similar results, and it will lead to prosperity among Nigerians.
All right, Mr. Alaje, well said there. I will have to leave it there now. Mr. Paul Alaje, senior economist at SPM. Thank you for coming on Business Morning today.
Thank you so very much for having me.
All right, after the break, AFEX Commodities Market Update is next. Do stay with us. Welcome back. Still watching Business Morning. Now for AFEX Commodities Exchange. The value of trade on the AFEX Commodities market in the week that ended November 22nd declined by 17%. However, both the number of contracts and the number of deals closed in the green up 553 and 50% apiece. Well, let's bring in Femi Kehinde now at AFEX right there. Great to have you on the program, Kehinde.
Right, great to be here. Good morning.
Yeah, so please, could you bring us up to speed with activities in the week that just ended?
So for the week spanning 16th of November to 22nd of November 2021, we actually saw a significant change in the level of activities on the exchange in terms of the value traded, the volume traded, and the number of deals. For the value traded, we actually saw a decline by 17% as the week closed with about 7 billion contracts executed on the exchange, while being a decline from a 8.5 billion contract. For the number of contracts executed on the exchange, we actually saw a significant surge by 553%, as we actually saw about 28 million contracts executed on the exchange. For the number of deals, we saw about 15% increase compared to the previously reported week, as we saw 330 deals executed for the week. For our financial benchmark, that is the indexes on the exchange, we actually saw the ACI remain the same, that is remain flat for the reporting week. However, the AEI declined marginally by 0.04%. In terms of the volume traded across commodity, maize continued to account for over 90% of the number of trades, having a wonderful week for the reporting week, trading about 27 million contracts for the reporting week. However, we saw soybean and cashew begin to pick up from the previously reported week, as they reported a significant increase in the number of the volume of trades executed on the exchange. For commodities prices, however, maize actually experienced a significant increase, increasing by about 9.08%. However, cocoa actually did significantly well for the reporting week, increasing by 1.08%. For soybean, we actually saw a significant decline for the reporting week, declining by about 0.99%. 0.99%, and paddy rice declining by 4.97% for the reporting week. For more information about our commodities reports, you can check our website, www.afexnigeria.com, and our social media at afexnigeria.com.
All right, Femi, thanks for that. Well, the MPC concluded the last meeting for the year yesterday, leaving all parameters unchanged. How does this impact your market?
So when we think about the MPC, we think about the MPR and the cost of capital, or we have to think about how processors will actually actually incur or gain working capital to actually go into the market to procure commodities. Given that the MPC actually retained its rate at 11.50%, we've seen that prime lending rate has averaged or has moved around 11.60% to 11.71%, indicating that there has been no increase or surge in the cost of capital. We expect that processors will continue to be able to acquire working capital in order for them to penetrate the market and continue demanding for commodities from the commodities market going forward.
All right. That was Femi Kehinde, the analyst structuring and origination at AFEX. Thank you for that update.
Thank you.
All right. So agriculture in Nigeria has always been less profitable due to a challenged value chain. In agriculture, value chain specifies the collection of actors and actions that bring a fundamental agricultural product from field production to final consumption, where value is added to the product at each stage. However, a number of issues contribute to agriculture's low profitability in Nigeria. Well, we have with us, joining us now, Oluwafunton Olashimo, VP Financial Market at AFEX, to weigh in on this. Great to have you on the program. Good morning.
Hi, good morning. How's it going?
Fine, thank you. So Nigeria's agricultural value chain system, has identified to have, many challenges. But can you, would you like to, can you highlight, some of the major problems, across the value chain?
Yeah, thank you very much for the question. And again, always a pleasure being on your show to lend my voice to the growing issues in the country. Again, Nigeria is a big producer of many agricultural commodities, and data has shown us that agriculture is a key sector of the economy. And of course, we've also seen in very recent times how various governments have given their voice and created interventions and programs to aggressively develop that sector. But one of the things we've noticed is that in spite of these various policy interventions by the different administration, most of these interventions have actually been targeted towards the production leg of the sector rather than looking at the entire value chain end to end. And what that then means is that you have only just one part of the value chain being developed. Agricultural value chain, when you look at it, involves all the processes needed to take the agricultural commodities from the production to consumption. And this includes when you go from purchasing the inputs to farm management, to crop aggregation, storage, offtake, and even up onto getting those commodities to the factories where they are produced. And then, of course, marketing and making them available on the market for the consumers to produce. So if you look at this end-to-end entire value chain, you realize that there's a lot to be done, and not just focusing on just the production leg of the agricultural value chain. And having said that, if you look at also the agricultural landscape of Nigeria, it is characterized by smallholder farmers, which make about 80%. And we have very few commercial processors. And a lot of the agricultural landscape generally in Nigeria is plagued by the use of obsolete technology, there's poor financing, and you have very limited access to market, you have lack of infrastructure, amongst others. Very recently, we released our crop production report for the 2021 wet season, where we surveyed about 10,000 farmers to understand what the projected production volume for the year would be. And one of the data points showed that less than 10% of the farmers that were interviewed had access to quality inputs or quality seedlings. And this also, again, goes back to show how we have very low production volume year in, year out. There's also the challenge of storage infrastructure. We have very inadequate storage infrastructure. So what that then means is that you have lots of high post-harvest losses, and because the produce are not properly stored, it affects the quality of the food. So you have low food quality. Right. And of course, then ultimately have inadequate supply of these agricultural commodities into the market, which then drives the prices high, because then you now have demand that is constantly growing due to high increase in the population, and then supply is unable to meet that demand, and it puts pressure on prices. And then, of course, it becomes very obvious in the current inflation for the prices of commodity and food inflation generally. Again,
Okay.
quite a number of other challenges. There's also slow adoption of mechanization. And again, mechanization is directed to helping you to increase your yield per hectare. But because we don't adopt mechanization, that is also a problem.
Right.
And if we also look at the production, less than 30% of the farm produce actually get processed. Bulk of them get wasted at the raw material level. And that, again, is impacting. It's a major challenge because we don't have adequate technology to take this produce from the raw material into finished goods like we have in the developed market.
All right, Oluwafoto. I guess it's basically the same problems we've had since I was in secondary school. Well,
Exactly.
could you identify, policy directions, private sector roles that, could help achieve strengthened value chain system?
So let me start by saying that in terms of policy direction and private sector engagement, I don't think there's anything new that I want to say that has not been recommended. But I think the most important thing in terms of strengthening our value chain is the paradigm shift. Given that your value chain has a lot of stakeholders that are involved and are coming together to increase the value of the commodity, we need to understand that we need to approach a multilateral approach for enhancing and increasing or strengthening the value chain system, an approach in which both the vision and the strategy brings together both the private and the public sector, with each sector leading specific areas. So there will be areas in terms of, say, policy making that will be strongly driven by the government and making the environment more enabling. These are things that should be driven by government and solely spearheaded by them. And there's also the sector of implementation of these policies, where you talk about unlocking the financing, developing strategy on an entrepreneurial mind to bring those strategy and policies into fruition. And so the combination of this public and private sector coming together, bringing in a multilateral approach is what would definitely, is the model that would work to strengthen our value chain. Thinking that only the value chain system should be strictly government-driven or should be strictly private-driven is a recipe for disaster. So there has to be that multilateral approach where each sector is strongly spearheaded by the party that has the strongest capacity to drive that sector. That way, we can then be able to begin to talk about strengthening our value chain or growing the capacity of our value chain.
Right, and Nigeria, like other countries in Africa, still relies on, rainfall to water farms. And, with climate change and reduced rainfall, how can this be managed?
So again, in terms of reliance on rainfall, one of the shortcoming of that is that it makes us a one-season agricultural economy. What that means is that for most of the commodity, production would only happen once, and this would always lead to food insufficiency. There has to be deliberate investment in putting together this infrastructure. And we need to also understand that these investments are long-term investments. They are not investment that would you would get the return on investment in maybe 270 days or in 1 year or in 2 years. There has to be conscious and deliberate investment in creating this infrastructure that would allow for irrigation. And when all of this come together, we can then begin to have an all-year-round production for most of the commodities that are available. Land availability is not a problem. Nigeria has about 74 million hectares of farmland that can support any and every kind of agricultural commodity. The challenge has been infrastructure such as an irrigation system, such that when we are not in the rainy season, how do we then utilize the land to produce the required volume of food produce that we need to support the growing population?
All right, and I saw a report saying that Nigeria, Africa's most populous nation, will spend a staggering $10 billion this year to cover food importation. What do you make of that?
Again, it goes back to the same story of we not being sufficient and our food securities just pretty much being exposed. Again, COVID also showed how non-resilient the food system is in Nigeria. And when we talk about food security, it's talking about when you have people at all times having the economic and the physical access to sufficient food, that not just any food, but food that meets their dietary need and to support a productive and healthy life, right? Spending that amount of money is to show that there's still a lot of work and a lot of gap to be done in order to ensure food security in Nigeria. And one critical way and to begin to address the problem is the integration of value chain into our crop production. Value chain and food security cannot be mutually exclusive. They would work hand in hand. And it has to be designed in such a way that it has to be economically viable for all the stakeholders. Everyone that is participating, it must be able to generate profit for the private sector. It must be able to generate taxes for the government. It must be able to create jobs for the participants in the economy, as well as it must also be socially sustainable. If it is not socially sustainable, we would still continue to spend this huge amount of money on importation. Socially sustainability simply refers to that it has to be culturally acceptable to the stakeholders, the farmers that are producing this commodity. Their standard of living has to improve. It has to reflect in their standard of living. There's also the fact that it has to be environmentally viable, environmentally sustainable. So we talk about the carbon footprint. We're all talking about climate change, right? Whatever whatever value chain integration we are trying to embed into food security has to be environmentally viable, such that it's not polluting the environment, it's sustaining the equilibrium of the environment.
All right. I guess that's where ESG also comes to play. All right, we'll have to leave it there now. Paul Alaje, VP of Financial Market at AFEX. Thank you for coming on the program.
Thank you for always having me. Thank you.
All right. All right, for an opening call to the market, now we have Willie Bonga. How's it going, Will?
Hey, good morning, Laddie.
It's
no surprises here, Laddie, because we're expecting maybe things to shake up yesterday after the CBN's MPC meeting, but no surprises, like I said, all key parameters, policy parameters remained unchanged. They're still constant, 7.5 for the interest rate, and maybe that helped the investors because the market was pretty mixed. You know, investors traded with mixed sentiments, and there were losses at international breweries, Owando, insurance stocks. Those losses weren't able to offset the 1.65 gain recorded in Access Bank. And so the all-share index dropped to 0.101%, which was flattish at 43,255.14 points, with the market cap remaining unchanged, and the month-to-date gain and the year-to-date returns were also unchanged. However, the total volume of trades decreased by about 91% to 217.97 million units and valued at 2.91 billion naira in over 4,100 deals. And GTCO was the most traded stock by volume and value yesterday. We saw about 36 million units of its shares traded, which was worth 919.63 million naira, and sectors had a mostly negative close. We saw the banking, consumer goods. Banking was up, consumer, industrial was flat, unchanged. In oil and gas was also down. We'll move over quickly to the fixed income market, where also trading was pretty quiet there, with more with more sellers than buyers in the market. We saw there was more, but there was buy interest for the interest rates at the mid-curve, end of the curve. There was little or nothing because the investors were still waiting to see the outcome of the CBN's decision, and that affected the trading activities in the market yesterday. But we have Choma Udu here to tell us what went on there. Good morning, Choma. Hello, Choma, are you there?
Hi, good morning. Thank you for having me.
Good morning, Choma. What are you expecting? We know that the CBN there's going to be an auction today. The Treasury bills primary auction is going to take place today. But we know that there was CBN's MPC meeting yesterday. But what are your expectations?
Hello, I can't hear you properly. Please, could you repeat the question again?
I said that we're expecting the primary auction, the Treasury bills primary auction, which is going to take place today. But bouncing off the CBN's MPC decision yesterday, what are your expectations for the primary auction today?
Okay, good morning again. There's going to be a primary auction from the DMO today. 118 billion is an offer across 3 tenors, with most of the volumes on the 364. That's the 1 year, where we have 111.07 billion on that offer. We expect that rates will close closer to the market rate, which is trading at sub 6 in the market. Yesterday, the rates traded at the 1 year at 5.7 to 5.9. So we expect that rates are going to close along those levels. The system liquidity is currently at 96 billion. We expect that FAC is going to come in before the end of this week. So there's going to be liquidity in the system. And we don't expect any debits except for retail and maybe a possible home auction tomorrow. So that is going to be going a long way in deciding the moderation of rates in today's auction.
Okay, so yields rose in the bond markets, and it was also flat, but it was flat in the Treasury bills market. Would this be the trend for the rest of the week?
Hello?
I said the yields rose in the bond market yesterday. We saw some rise in some maturities, and we saw that the Treasury bills market was flat. But would this be the trend going forward this week? Would that be what we would experience for the rest of the week?
Yeah, we've noticed a slight bearish bias in the bonds space. We've seen a lot of portfolio holders trying to rejig their portfolio. We know that there's going to be a lot of borrowing towards the end of the year. We have Sukuk and then the Lagos State bonds on offer as well. So, a lot of asset managers and portfolio holders are trying to, rejig their portfolio at the long end and try to invest and trying to see how they can get most of the yields that are going to be the trade that's going to happen when we start having the tapping from the Lagos State and Sukuk bonds. So it's basically a yield play on that space. But, to your question, we expect that the market is going to be quiet till the end of this week with the bearish bias continues on the long end of the curve.
Thank you so much, Choma. Choma Udu is a fixed income dealer at GT Bank. Thank you so much for your input on the program. So, Ladi, that's what we have for the market review this morning. And hopefully the report will be better
later.
It'll be
interesting to see how the equities market plays out this week. All right, Will, thank you so much. All right, we'll take a quick break. Now, when we come back, we head on to the UK. Do stay with us. Welcome back. Now let's head on to London with Juliana standing by. Great to have you, Juliana. Good morning. Well, the president of the CBI has called on Prime Minister Boris Johnson to, stop hiking taxes and focus on boosting investment. What are you hearing about this?
Yeah, good morning, Laddie. Well, the Confederation of British Industry are a massive lobby group. They represent hundreds of thousands of businesses up and down the country, and they've been having this week-long annual conference. It was kick-started on Monday with a keynote speech by Prime Minister Boris Johnson. I've got to tell you that speech has been ripped into pieces. A pretty embarrassing show by the Prime Minister, if I must say so myself. I was watching it live in the studio. There were lots of gaffes. The Prime Minister lost his notes. There was some actual referrals to Peppa Pig. Don't know if you've heard of Peppa Pig, a very popular pig
my
across
like
the world. And it was a little bit of nonsense, really, especially because, of course, business is not really happy with the Prime Minister and his government. Typically, a Conservative government here in Britain does get on well with big business, but that hasn't been the case, particularly during the pandemic. Lord Billamoria, he is the president of the CBI, is also the owner of Cobra Beers, so he's raking in lots of money. He is due to speak later today, and he is going to rebuke some of the measures that the Chancellor Rishi Sunak and the Prime Minister have put in place, which he seems to consider a burden upon business. I suppose the most notable of them will be the increased hike in corporation tax. That's going to increase from 19 to 25%. And of course, national insurance is going to increase by 1.25 percentage points from April next year. So we're expecting lots of rebuking statements from him, particularly when it pertains to research and development, investment. Britain are lagging behind the US and Germany in those areas. Business rates, a huge issue that businesses have been suffering from, particularly retailers. They're completely out of date and they need reform. So yes, we're going to be expecting a huge statement from him, especially as the Prime Minister's went down like a damp squib.
Right, quite an interesting one there. Well, to aviation now, Ryanair Chief Executive Michael Alaje has warned of a fraught period ahead for airline bookings in Europe. Seems the outlook for the holidays are looking quite shaky.
Goodness me, yeah, shaky is one way to describe it. The outspoken boss of Europe's biggest airline by passenger numbers was speaking at an online forum yesterday, and he's concerned. And I suppose a lot of people are surprised because, of course, a couple of weeks ago, Ryanair posted the third quarter losses for the first time since we're starting to emerge from this pandemic. But are we emerging? Because Britain, not just Britain, Europe, they are seeing a fourth wave of COVID. Not only have we seen lockdowns in Austria and in some parts of the Netherlands, Germany, Europe's biggest economy, are likely to go into a lockdown sometime soon. There are restrictions that are creeping up and down the continent. And he said they are starting to see that this is showing in bookings. A lot of customers are cancelling flights, now looking to fly elsewhere outside the bloc. He even said that in summer, which a lot of people do book way in advance, especially on a budget airline like Ryanair, numbers are going down. So it's not looking good for the travel and leisure related industry, especially when a budget airline is complaining that they are already starting to see the casualty from it.
Quite interesting. Well, I guess we'll just try to make the best of the holiday. All right, Juliana, thank you so much.
Thank you.
All right, let's look at the crypto market now. We see Bitcoin struggling to recover above the $57,500 mark against the US dollar. BTC is declining and could accelerate lower below 55,000 in the near term. Bitcoin is facing a tough resistance there at key levels like 58,000 and 57,500. Price is now trading below 57K and the 100-hourly simple moving average. Let's look at the market cap there. We see $2.56 trillion. It's up about 0.84%. See some buying action happening in the market there with volume up about $128.39 billion, up 10%. Bitcoin dominance did inch down there, down 41%. And we see Bitcoin below 57K there at $56,582. And the 24-hour volume, $35.92 billion. Let's look at the top odds by market cap. See Ethereum trading at $4,260. Ethereum has managed to stay above the 4,000 level. 24-hour volume, $21.50 billion. Now the top odds by market cap there, we see BNB there up 3.44%. Cardano still down there, about 6% lower there. Solana, $217, up about 0.14%. XRP still holding that $1 mark there. Let's look at top gainers now. See Sand there, leading the top gainers, is up 27%. All right, let's bring in Solomon Amunde now to bring us up to speed. Hello, Solomon. Great to have you.
Good morning, Laddie. Good morning.
Good morning, Solomon. What do you make of the current price action in the market? It seems Bitcoin is struggling to stay above key support levels.
The audio is extremely low.
Can you hear me?
Yeah, I can hear you. It's pretty low.
Okay, so I said Bitcoin is struggling to stay above, key support levels. What's going on?
Yeah, currently we're actually at a support and resistance level. We are expecting Bitcoin to retrace down to the range of 53 and 55,000 before making a massive move to almost $100,000. And we really, really need to tap the liquidity. We need to tap liquidity at $55,000. And worst case scenario, we're looking at $63,000. We need that massive momentum to give us that massive leg up to hit at least $80,000 and go beyond that to $100,000.
All right, so, looking at the market has been quite volatile for the past 2 weeks. What altcoins have, performed for you?
Yeah, basically, what's been happening in the market now is gaming projects. We've been seeing investors are throwing massive money into gaming, projects, and we have seen Sandbox. Sandbox has done over 300%.
Hello, Solomon. All right, seems. Hello,
Okay.
Solomon.
Yeah, I'm with you.
All right, carry on. I lost you there.
Okay. So we're seeing so much money move into gaming projects, metaverse, and we've seen Sandbox has done over 300% from below $2 to over $6 today within a space of 10 days. We've seen Mana has done the same thing, similar, over 200%, and we still expect these projects to do very, very well. So I would say this last phase of the bull market, we would actually give it to the metaverse project.
Yeah, it's all about metaverse, play to earn. But what alts are you bullish on, going to the end of the year?
Okay, I've been looking at the Binance token, and it hasn't really moved. I'm expecting Binance token to hit nothing less than $1,000. PancakeSwap to BIC, all these projects on the BSC network, or BSC blockchain, basically, I'm expecting them to do an easy 2 to 3x. So I'm obviously looking at Cake, BNB, I'm looking at BSCS. They've been doing massive ICOs for the past 2 months, and it's yet to explode. So I'm also looking at $3 from about 50 cents to $3 for BSCS. So these are like a few of the projects I'm looking at.
All right, Solomon, always optimistic. Thank you so much, Solomon.
All right.
All right, let's look at the top gainers there. We see Sand leading that charge there, up 27.34%. We see Audius there, up 26%, $2.61. And Zcash, one of the privacy tokens there, up 23%. XDC, up 21%. So it's a double-digit gains we have this morning. Let's look at the top losers. Right now, we see Eagle there, down 14%, $459. It's had an incredible run this year. AFEX, $9% down, $118.61. And we see, interestingly, Shiba Inu, after an incredible run, we see Shiba Inu there having a massive pullback. Got as high as about, still less than a penny, though, but it did do about a 300% run the past month there, but we're seeing a massive pullback from Shiba Inu. Could be profit-taking. It's down 9% this morning. Cardano also featuring there, down 6%, and we have VGX there at $4.51, down 6%. So it's a mixed market we're having this morning. Anyway, that's a wrap on the program today. Thank you so much for watching. Do remember to join us at 1:30 for Business Incorporated for more business updates and developments in the world of business in and around Africa. Thank you so much for watching. I'm Ladi Williams. Enjoy the rest of your day.